Hi everybody, it's Adam. I'm back here with another review video from today's market, and as you can tell, it came down in the afternoon session. It's pretty nice, pretty nice. So the morning session after FOMC can typically be pretty choppy, and basically that's what ICT has taught us. So we are expecting chop in the morning session. So expect less, basically, out of the trades that you do place. So anybody that really wanted price to go up today above this high from these lows is like, I don't know, good luck to you. But if you predicted that, awesome, because that was kind of hard to predict if we were going to get up into this high based on the smart money concept. So what I was actually looking at myself was a nice little move up within here, and then for it to fold back over to continue down lower towards the NWOG within here as well. You can tell I hit down here in the afternoon session, but I was kind of looking for like a fold over here in the morning, looking for break of structures. There was no clean entry for a sell in the morning session. Sells did come in the afternoon. I'll get into those a little bit later. But this was the NWOG target here, and we came up and hit the rejection block from this area, and also here in the daily time frame from the rejection block up within here. So come up in there. We have a lot of confluences for it to come back down later in the afternoon session. All right, getting down here to the 1 hour time frame, we come down. We made this low here up in London, and then we came up, and then we started moving up higher within this area. And on the 15-minute time frame, it's like we had this 15-minute bullish closure here at 9:15 to 9:30. So that bullish closure is basically like a green light. Like, okay, are we actually going to move higher above this high and possibly up into here? That's possible. There were entries. I'll get down into that in a minute. But I was looking for price to actually fold over here within this area. I'll get down here in the 5-minute, just a minute as well. So we have this 15-minute wick from here to here. You draw the middle of that. That's going to be about in this area, right about here. So that's kind of my threshold of like, okay, I don't want to see it go much higher than that before it folds over, but we can see what we get from there. But ultimately here in the market open, I don't like to enter right away in the open unless it's really, really, really clear to me, which it was not in the morning session. It was not that clear to me. Broke up, and then we came down within this gap. It did hit this breaker here. So this is one of my favorite entry models, but it wasn't that clear to me because I had a bearish bias where price was looking to fold over from here. So I wanted to wait off here on the buys and see if we did get that fold over, which didn't happen until later in the afternoon. But it came down in this bullish 5-minute candle closure, then came up and retested within here and looking for more of a fold over, never came in. And then this 5-minute bullish closure, like these 5-minute candles are really one of the higher confirmations of the trades I take myself. But I'll get down here in the lower time frames after we see these closures. So we have this closure here and we have this closure here. So let's get down into this area down here in the 1-minute time frame to see where those came in. So you notice how we have this rally up higher. So it came down, hit this breaker within here and starts rallying up. We have the equal highs up within here, and then we have the NWOG as the ultimate target, which was up there. I know ICT was mentioning that, but like I said, I didn't take this trade. I don't take trades based on his tweets. Basically been wrecked more times than not based on going off what he tweets versus sticking to my own analysis and whatnot. So that's why I didn't take that buy within there. But then we started to see price move up higher, and this is where I was taking some buys within this area here. So we shift down, we come back up, and we're still rejecting this NWOG, which is this blue box that's right here. And after we reject that blue box, let's go here to the 5-minute time frame. You see how we're rejecting it right within here, and then we have this 5-minute candle closure. Once you have that 5-minute candle closure, after the rejection of it really holding this bullish order flow, boom, I think it was green light, ready for price to start moving up higher. So I'm entering within here. So we have this 1-minute volume imbalance. I entered there, and then we go to the 2-minute time frame. There's also another volume imbalance that came in right here. And what is a volume imbalance? It's just basically a glitch in price where there's a gap within price within the candle. So it closed here and it opened here. And you can see there's a gap within there, and those will act as a form of support and resistance. As you can actually tell right here, this wick came to the high of this one here. So those are just another entry confirmation within there. Taking it up, close positions within here, and then also up within here as well. You can use fib extension targets within this level. Boom, boom, boom. So this was a cleaner trade in the morning session. So it's like, if you take anything out of this video, it's like, okay, you might be wrong sometimes, which I was wrong on the selling bias. Okay. So now it's like, what do I need to see if price wants to go bullish? I need to see bullish order flow. I need to see the 50% of wicks being respected. I need to see NWOGs held as support I need to see the 5-minute bullish closures with retests with environment balances or gaps, and we were getting all of that. Since price did not fold over, you can see in the time frame. I know it's all hindsight now, but in the moment, look back at this candle. I was thinking this candle, if this wanted to come up, wick it one more time and start to shift down lower within this area, I would have shorted this bitch all the way down below these lows down below here, but we never got that. So price did end up wanting to close higher, as you can tell. This bullish closure was like, okay, maybe we're going to keep going higher. And since we got up into this wick that was over here in the 15-minute that I was talking about earlier, I was like, okay, maybe that we're going to just continue up higher from there once we saw this 5-minute candle closure, which we did, that's where the position was. You know, like that was the highest probability position in my opinion. We start to work our way down. So this is another one of the selling patterns that is pretty highly probable in my opinion. We whip up into like a higher time frame point of interest, which was the daily rejection block that I just went over in the beginning of the video. We start to consolidate and we break lower. So this displacement in price, then the retest of this order block is basically green light. We're ready to come back down. So where is the sell side liquidity? Down below this low, this gap, these lows down here. So I don't trade like the lunch session. So I was not in the trade on this lunch session. So price did end up trading down, and I was looking here within this area, and it rejected down again right here after rejecting this gap. And this is where I'm like getting on the charts, like 1 o'clock, and then we get into like 1:30. We start to see this move up higher. I actually screenshotted one of my charts. I put it within my notes, and then I printed it out and wrote on it. Anyways, this rejection here below this low within here, below this low at the market open, boom, up in there. It's also down in the opening range. So if you go to regular trading hours, came down into the opening range, and then we had another rejection within here, and then price started shifting up higher within there, and then I see this 1 hour gap, not 1 hour, 1 minute gap as a potential target up within there. We also had S&P divergence with NQ, so I'll go over to that real quick, which made me take this buy within here. We had this lower low made here, but NQ made a higher low. And once we had that higher low made, we saw another market structure shift. And that's where I was entering positions within here. So we had this market structure shift, and then this retest this order block to take up into here. So it came up in here, partials, and then the rest at break even. Is that fine? Yes, because we are in bearish order flow and could expect lower pricing. It's the 130 algorithm Judas swing that happened. So this is usually the fake move. So I didn't know if this was going to be the fake move down right here at like 130, or if this 130 to like 145 area was going to be the fake move, which it ended up being. But once price shifted structure again, I was entering more based on the 15-minute order block that was given over here. So we go over here to the 15-minute order block. It's like, okay, we see this 15-minute candle close, and like it comes in with experience. It's like once you see this bearish closure and it comes up to retest the order block, it's like, okay, we're getting ready to go down. Like we have liquidity here, we need to reach this area, and this is where we're going to be taking the trades off the position. You know what I mean? So price shifts down these 5-minute bearish candle close. So we have this one, wick up in here as well within the consequent encroachment of this 5-minute wick, come up and tap it again right at the high of this opening range. So that's something I took notes on today. So I'm going to be studying it and backtesting it more based on the opening range acting as support and resistance. So you can see it came down and it came up to start retesting the high of this opening range as well. Whereas even here, this is where the order block was up within this area, and then it starts to shift down. This is like a 15-minute indecisive candle, and you can tell over here in the 5-minute it's kind of all choppy. So in areas like these, it's like, okay, it's all choppy. What do I do? So basically what I've come to do that has helped me in my trading and my psychology is looking at that 1-minute chart. You're going to get chopped up, you're going to make dumb decisions, you're going to just like enter on an impulse candle. It's best to sit back and just relax and mark up the chart based on what you have. So stick to the 5-minute time frame. Not financial advice, but like the 5-minute time frame. Nothing below the 1 minute. So if it's 2 minute up to 5 minute, you can get a better picture of like what's going on here with price. So as we can tell, we are shifting down. We're getting bearish closures. We have this wick coming up and rebalancing. Measure 50% of this wick. Look at the top of the opening range high from here. You know what I mean? Look at the shifts that are happening within this wick as well. The 15-minute closure. We have sell side target. You know what I mean? As long as my stop loss, thinking about this trade, my stop loss was up above here, I'm not worrying about it getting hit. If it goes and gets hit, cool. It's fine. I'm just going to wait on the trade to play out. I'll wait for another situation. You know what I mean? So taking this trade and then taking it down to these lows is ideally what we're looking for here. You know what I mean? Having where is the draw in mind. So like that's where our focus is. Not are we going to get stopped out. It's going to be where's price likely to go now, and is it likely to get there? And also during this time it's at the 150 to we have the 210, which is right here, which is this move down, and then this move actually started playing out a little bit after 4. So I mean not 4, 2 o'clock. 2 o'clock. So a little after 2 o'clock this started playing out down within here. We came down to the NWOG. And it's like, oh, you might be like, oh, I'm missing the trade. But then it comes up and it spikes everybody back up. And I would not want to buy any of this. So it spikes up, comes down. I would not want to buy any of this. I know you can go down to these 1 minute time frames and you can kind of see that we did have a 1, 2, 3 divergence move that I like to go over. Then over here on the 15-second, I know we had a possible entry if this is really how risky someone wanted to be. We came down within here. We had a market structure high here. We shift to market structure and start retesting here on the 15-second time frame to launch up in here above this high, up into these highs, up into this high up in here, trailing that entire range that it was created. But ideally, I was watching price again later in the day, and I was like, okay, I'm not taking anything. I'm done. The short was it. Price came back down within here, took out this low, shifted up here, and it's like, okay, we're going to see if this order block can hold. And if this order block can hold, we're going to see what we can get for more entries within here. Price shifts up again, so there's our market structure shift above this high. We start to retest this breaker within here, and we start to retest this gap that's within here as well. So we had 5-minute candle closure again. There it is again, another bullish 5-minute candle closure. You know what I mean? Like everything's all aligning for the position to then rip up here, and possibly even up above this high, but that actually did not get met. Didn't even get met like right now. So that's just like what I was looking at there within the end of the day. Did not take that trade, but that's just what I was tape reading myself. So if you got anything out of this video, basically understand like during choppy conditions, going to the 5-minute time frame, it's really good to like focus in on your bias from the 5-minute time frame and just drowning out all the other noise and just focusing in on what you see and not what you want. And also in the morning session, I'll give another example of this. You can take this away as well. It's like, okay, you might want to short like I did today, but if price is showing willingness to go in the other direction, then just take it in the other direction. Wait for those confirmations of order blocks, fair value gaps, volume imbalances, and then your drawn liquidities of like NWOGs or rejection blocks or other breakers that it can be drawn to or whatever. But that's just basically what I follow my plan, and it's been working out pretty well. So let me know if you guys have any questions. Take it easy.